Welcome back to FT Markets. The European Central Bank meets this week, a time to review its 60 billion euros a month quantitative easing programme. Has it succeeded in boosting Eurozone economic growth and, more importantly, inflation? With me to discuss the ECB's progress so far, what it means for markets, is Gilles Moec, who's the chief European economist at Bank of America Merrill Lynch. Gilles, welcome to the Financial Times. Let's start with the easy bit. If we're looking at Eurozone growth, there have been some quite optimistic signs recently, haven't there?
Yes, no, definitely. I mean, the data flow is positive. What
matters, of course, crucially is inflation. And what's interesting, if we look at our first chart, is if we look at, this is the main gauge of markets' expectation of inflation rates over 5 years, starting in 5 years' time. We saw that dramatic fall last year. Since January, when they announced QE, and March, when they actually started buying bonds, we've seen a gradual pickup, but nothing very dramatic.
Nothing dramatic, and actually, if you think that QE had started to be telegraphed or communicated to the market around November, December, we're actually below where we were at the time when the ECB was expressing actually quite a bit of concern about this. If you go a little bit back in time, when the ECB embarked on, let's say, the first version of QE limited to ABS, basically in the summer of 2014, we were obviously on a declining trend, but still very close to the ECB's reference value. We are lower than that now.
I suppose they could argue the trend is now turning upwards at least. If we look at our second chart, what we've done is to look at what the ECB has forecast for inflation over the next couple of years and what you expect. Let's just look at their central projection. Very handily, it seems to come just in line with their 2% target in 2 years' time. Do you think that's a credible projection?
Yeah, that's the magic of modelling, that the very last point is consistent with their own definition of price stability. Honestly, I think they are a bit over-ambitious there, and I think they know it, and the entire communication is actually more on the downside risks. I think there are several issues around this. One issue is what's going on with the impact of the depreciation of the currency.
The weaker euro, yeah.
The weaker euro. Even the ECB is at the moment saying that there are issues with the usual pass-through.
That should send inflation higher.
That should send inflation higher, but there is actually a little evidence of that right now. If you look at soft data like PMIs, for instance, input prices are up, so companies actually feel the increase in their imported products, but output prices are stagnating.
You're forecasting, if you look at your forecast, which is the purple line, inflation's still very much below their target in 2 years' time.
Yes.
Does that mean you think they're going to have to do more, even more?
Yes, that's our baseline. That come next summer, obviously growth will have improved nicely, but inflation will still be too far away from their comfort zone for them to afford a sudden stop to QE.
Are you saying that QE is not working?
No, QE is working, but I think that QE to be fully efficient needs to continue for quite some time. I think QE at this stage, as you said, managed to floor inflation expectations. It has already started to improve inflation expectations, but probably not to the extent at which we would be really comfortable with.
What do you expect it to say this week? Do you think it's going to change its inflation forecast?
I think it's too early for them to actually do this, and you could say that the communication we had from governing council members or board members like Benoît Cœuré or Christian Noyer has already had quite a nice impact on the market, taking the currency down. So I don't think that Draghi needs to do extra. And if he were to change the central projection downward, I guess the immediate question to him will be, okay, so if you think inflation is going to be even weaker, what else are you going to do? And I don't think they're ready to disclose this.
But presumably potentially disappointments for markets in months to come if inflation doesn't pick up.
I would think that the market has learned to trust the ECB and the capacity actually to deliver when things are not basically developing as planned. So I think if inflation really misses in the next few months, and it will be core inflation because headline could actually move up because of oil, but if core inflation stays stuck at a very low level, I think that by the second half of the year we'll have enough communication from the ECB to make us confident that they will continue after September.
Gilles, we'll have to stop there. Thank you very much. So a prediction that the ECB will have to do even more to boost Eurozone inflation, but not just yet.